Hello, Facebook world. We are kind of working around some new challenges here. As always in real estate, there's challenges in technology. So we're working a little bit with the live Facebook feed. Hope you're joining us live today. And if this continues to work, we will continue to go live. We've had some issues in the past where our live feed has gotten shut down and then we had to restart it. So either we will continue to be live or we will record it. Either way, we'll continue to bring you guys some great information around real estate. So this is episode 18. And
wow, I can't believe it's 18. Like, it's been quite a few episodes.
It kind of goes by pretty quick, yeah. So I'm excited. So we have Tracy Ottinger here with Residential Mortgage.
Hey, everybody.
Of course, Nani Palmer with Les Bailey and Associates here at Keller Williams. Today, we were chatting, Tracy and I, the other day, and it was like, what's the standard for this or what's the standard for that? And so we decided we were going to talk to you about why the word standard maybe shouldn't even be used in real estate because of so many discrepancies out there around every facet of the real estate transaction.
Every single deal is different. I mean, I can't remember any one deal that I've had that I'm like, oh, this is exactly like the deal I've had a year ago.
I've done 100 of these deals before and it's exactly the same. No, it is. It's, everything. And I have my clients ask me all the time, like, what do you typically expect here?
What's normal?
What's normal? Well, that there is no normal. It's kind of like after you have a kid, it's like people go, oh, I'm waiting for life to get back to normal. And I'm like, welcome to your new normal.
Yeah.
Because it is never going to be like it was before.
Exactly. I don't know about you, but there's so many times in the past where when I talk to a customer or a client, they're like, well, my brother or my so-and-so, this is what happened to them. How come it's not the same for me? Well, every loan is different, every person is different. You're not going to have the same loan that your brother did. My brother got 2.75% interest rate. Okay, well, did your brother do a 5-year ARM? And
right.
Are you willing to do a 5-year ARM? Because that's what comes with that kind of interest rate.
Well, I think that's interesting. So what do you typically look at on the loan end and why is it so different? I mean, so if, me and my brother walked into your, place of business, why are we going to get such a different...
You're both going to have different needs, and you're both going to have different qualifications. You and your brother don't have the exact same debt. You and your brother don't have the exact same income. He might be moving in 3 years, and you might be
the same parents.
Yeah, you might look alike, but when mortgages come along, that it kind of ends there. You might want a 30-year fixed rate mortgage and be really conservative, and he might be like, I want a 6-month ARM.
Totally risky. Different options. So basically, because of the uniqueness of the person and their financial portfolio, I mean, super jealous. He gets a VA loan, I don't.
Right,
so,
exactly.
You basically look at them, and then what? How do you determine what's?
Well, that's part of the interview process. I interview them and get to know what their needs are and their wants are, and then we can go from there, because there are literally hundreds of loan programs to choose from. So in order not to overwhelm the consumer, I don't say, here's your 100 loans to choose from, because they'd be like, I find out what their needs are first, and then I narrow it down to maybe 3 or 4 loan programs and say, these are the options that I think would fit you best.
Right. So what do I standard or normally need for the loan?
No standard. So
I know you need tax returns, so that's kind of a hard, steadfast, you gotta have that.
Definitely pay stubs, W-2s, we're gonna pull credit. That is, I guess we could use the word standard. However, your credit's gonna be different than everybody else's credit, and your pay stubs are gonna be different than let's say you work overtime and your brother doesn't work overtime. Well, you've only had your job for 6 months. I can't use your overtime to qualify you, but he's had his job for 2 years with overtime. I can use his overtime to qualify him.
Interesting.
Difference. Yeah.
So I think that's kind of, why people get so confused, though. I mean, they're like, oh, well, this person got that. I was just talking to my coworker and they were able to do this. Why can't I do it? Oh, I'm mad at you now. I'm going to go use somebody else because they are going to do a better job for me. And that's not necessarily the case. It's just everybody's situation is so different.
Yeah, definitely different. And then, guidelines are never black and white. They're always gray. They're always gray, and they always depend on the person.
Gray lines?
Yeah, exactly.
That's funny. So that's interesting there again, because I hear from my clients quite a bit, like, why are they wanting more information? I gave them all that information before. That's
a good point too, because like we always try to prepare the customer. One piece of documentation that you give me could lead to another one. So if you give me a bank statement and you've got a $20,000 deposit on there and you're using that for a down payment, I'm going to want to know where that came from. Right. So we're going to ask for more documentation.
Right. Why didn't they ask for this from the beginning? Why are they now asking me?
We didn't know. We didn't know you had $20,000 deposited in your bank yesterday.
Yeah. Well, and that's, there again, another thing. Like, you guys actually have to be able to account for large deposits, large withdrawals, and then you pull the credit again just before you close. And I think people don't realize how under scrutiny their finances are and different things to that.
We don't necessarily always pull credit, but there can be things that happen we always pull credit, but we don't always pull credit before we close again, because there can always be things that happen during the process, like you got a car loan, it wasn't reported on your credit when I first pulled it, so now I'm going to have to pull it again, and then I see all different other things on there, which would make a difference. You're not getting a $20,000 car loan, you're getting a $300,000 mortgage. We're going to be a little bit more detailed than...
Completely different.
Yeah.
I was talking to you earlier, and I was like, I don't know, I always feel like when I have my credit pulled, I feel like I'm standing naked in front of somebody. I'm like, hello world!
I know, I think that was so interesting, because I can definitely understand why anybody would feel that way.
Yeah.
I get a common reaction, like, I'm like, okay, I'm going to pull your credit now. And for me, it's so commonplace, because I do it every day. Like, if you have bad credit, if you have good credit, if you have great, I'm not going to judge you. I'm going to help you, depending on where your credit stands. But I can understand from the customer's point of view, this is the first time they've done this in a long time. And they're like, I don't want you to know everything about my credit.
Well, it's funny, people are so different too, though, because, I sit down with clients and sometimes they just go right into it. Like, here's everything about me, and they pour out their life credit, and I'm like, I don't really need to know, save that for the lender. And meanwhile, it's great that they're willing to share, yet some people are just very guarded and other people aren't.
Right. So definitely don't feel like anything is standard per se on the mortgage loan side. What about the real estate side? What about listing somebody's house or showing somebody a house and being their buying realtor? Like, what do you come across?
So let's just start with the listings. We have some, great big builders in town, and they build the same house, in different locations, and you would think that, selling that house is just like selling this other house. Well, anytime you have a house and people in it, there's going to be different things about that particular house. So not even, if you take two homes that would seemingly be exactly the same, selling them isn't exactly the same, because people have made changes and different things have happened to it, different locations and all that other stuff.
Right.
So, standard for us would be, we look at the comparables, we see what's out there, we try to discover any issues that might happen during the process, and in that aspect we want to look at that. But every house and every person and their needs, there again, same with you, is different, so some sellers have to get out of here like yesterday, and if that's the case, then we're going to counsel them on pricing differently. Some sellers just really don't care if they sell, and they just want the highest price, or if it sells, great, if it doesn't, fine. So we look at that, and because the economy and the market is always changing, 6 months is yesterday's news.
My neighbor last year, he sold his house for like $50,000 more than what you're quoting me.
Old news. The other thing is like, I just met with some a really great couple today, and they said, our neighbors over there listed their house for X amount, and I'm like, well, your house is a different square footage, you have different features, and when I'm looking at homes, I'm looking at like products, and so trying to keep it within the same square footage, same bedrooms, same bathrooms, and all that other stuff. Close radius, right. And, while the information in the neighborhood is definitely relevant, the house across the street that may be 500 square feet larger, that information is, worth looking at, but it's not maybe necessarily the best comparable for determining your value. And what a person wants and what they get are two different things as well. So
Exactly. What about, you guys just did, last week you did home inspections.
So they kind of bought over to maybe the buy side.
Yeah.
Because I get a lot of buyers that say, "Oh yeah, well I want the seller to take care of everything," or
I have a question for you regarding buyers, because I know myself as a buyer, I was one of those people. I'm like, I want everything on this home inspection fixed. Is that common for buyers to do that, and is that realistic for buyers to do that?
Well, I think there again, it's perception. I think buyers' perception is that sellers are taking care of everything. That's what they do, and sellers' perception is, here's my house. I've lived in this house. I've dealt with these issues. Thank you very much. You take them and deal with them as well. So trying to get the two to come together in the middle ends up, being part of that negotiations. But there's no standard as far as that goes. Sellers don't have to do any repairs.
Yeah.
Buyers don't have to take the house as it is, so it kind of, does the price meet the value? Does the buyer see value at that price? And that's where all those things kind of come into play. But is it standard that sellers take care of life and health safety issues? I have home inspectors that the buyers come back and they go, well, the home inspector told me that the sellers typically take care of all the life and health safety issues. No, they don't. Are they amendable to? A lot of times they are, but that's not a standard per se.
It's not a standard. However, when you jump over to the lending side, the lender's going to require all of those items to be fixed, health and safety. So then you would then have the buyer and seller.
For all loans?
Yeah. All loans, health and safety, if it's on the appraisal.
On the appraisal.
Not on the home inspection.
Exactly.
So there you go. Yeah,
that's kind of the other side of it. I mean, not all appraisers are going to call out.
Right.
And they don't always see the home inspection, so they kind of look at what they consider health and life safety, and they won't call out. Inevitably, 5 appraisers won't call out the same things, and 5 home inspectors won't call out the same things, because there is no
it's all opinion
standard. It's all opinion on what is and what isn't health and life safety.
Right.
So, and we were talking about this before, where it's like, how come this was called out now and just last week this item wasn't called out, and even from the same appraiser or same home inspector and those types of things.
Right. In my line, same mortgage underwriter, same type of, same kind of loan transaction, but this person, they're calling out for one thing and they didn't for another. Well, it's the same loan, but they're not the same person. They have different risk factors.
Right. And how come you didn't know that? That's a big question I get on. Well, you've been doing this for 16 years. How come you didn't know that was going to happen? I'm like, well, because it changed on me. I mean, like, they weren't calling out. This was a funny one before that. When I first got in the industry, they didn't call out posts to go in front of the heating furnace, in your garage. Well, some person, I'm not going to say a lady, but some person ran into their furnace.
Oh, that's funny.
And now it becomes this standard that most home inspectors call out. Now, do appraisers always call them out? No, they don't. So, and if an appraiser doesn't call it out, it doesn't make it required on the loan for the lending side.
Right.
So is it negotiable? Technically, yeah, sure.
Yeah.
And even if it is required for the loan, I mean, is it required that the seller do it or the buyer does it?
Right. And you're never going to get a perfect property. No. It doesn't exist. Even new construction.
Yeah.
So.
Well, I mean, there again, I think we just live in the real world. And there's real things that happen, and all people are different, and our pain thresholds are different for different things. So it's just kind of interesting how all that comes into play, and so that's why it's hard to have a standard. Looks like we're getting our windows cleaned or something.
All of a sudden I heard squeaking behind me. I was like, is there a mouse trying to get in? But they're cleaning your window for you. That's nice.
Yeah, so when we open up the blinds, it'll be nice and sun shining out and different things to that effect.
What other kind of things aren't standard in our business besides everything, but in detail for these guys?
Well, I think, the biggest thing to remember personally for me is that you have somebody that is proactive, not reactive. And that, yes, the experience in time in the industry definitely helps you kind of plan in the future for what kind of issues may or may not come up. But, just having somebody that's willing to work and resolve those issues as quickly as possible. I think people have to understand, because there is no set guideline or a checkbox that we can mark for every single little thing. We, in the industry, I mean, I know in our team we have multiple checkboxes, and we go through each of these checkboxes. Meanwhile, you're not going to, there's certain things you just aren't going to see.
And yeah,
until you get there.
Well, and that's one thing I really love about my job is I am constantly learning. Like, we've been in the business together, you know, combined almost 40 years, and I don't have a boring day. It's always interesting because it's never like the deal was before,
right?
You know, yesterday.
Well, you're dealing with different people, and that, you know, in and of itself, you know, what they want, what they need, and different things to that effect, and what they can do, you know, especially, you know, when it comes to loans, it's like what they want isn't necessarily what they can get.
Right.
And then you're dealing with, you know, different property where, you know, things have come up over time, and it just, you know, takes, you know, I think being proactive and not reactive in dealing with each of those actions and stuff.
Yeah,
so
definitely. All good reasons to have experienced professionals help you with your transaction. I think, you know, unless you have anything else to add.
No, I love it. I mean, that's a bit like you said. I love, you know, meanwhile, while there are checklists and we do look at stuff, I love working with the clients and helping them, you know, navigate the waters of real estate. And that's kind of what it is. I mean, as you know, raft, you know, down one river, you're never going to get the same ride that you got the first time. And I think that's kind of how our business is. You may know the path, but it's just going to always be a little bit different. Sometimes it's bumpier because there's more waters, and sometimes it's super smooth sailing. And that's, I think everybody, if they just keep an open mind and they work together, then you can make the transaction, everything just really super smooth. And
absolutely. And the professionals in our industry, whether it be home inspectors or appraisers or title reps, most all of them we're all combined doing this.
Well, no good people typically.
Yeah. We're all trying to get these people the house they want or sell the house they want to sell. And we want to see that happen for them. So.
I don't see anybody in the industry that says, I'm here because I want to screw people over. I mean, I've never heard that come out. You know, it's really, their heart is in the right place.